Bitcoin, for the first time, represents something that looks orthogonal, which is you can have a lot of volume and actually have a lot of volatility. But actually in the future, I think there's going to be more companies buying Bitcoin, not just from the financialization aspect, but because of the social capital that will also be accrued by those types of companies to be able to win consumers and win operating leverage in businesses.
Why is it that Bitcoin is so perfectly made for this type of financial engineering that we're seeing?
Great question. I would say there's three prongs to the reasoning. The first is
Jeff Park is the head of alpha strategies at Bitwise Asset Management, where he leads the firm's multi-strategy crypto hedge fund and oversees the launch of innovative option income ETFs.
With a background in institutional derivatives trading and digital asset investments, Park brings a wealth of experience to crypto-focused investment strategies.
I joke around sometimes that strategy is the altcoin of TradFi because it trades with leverage, volatility, and beta to Bitcoin. So it looks like an altcoin just for TradFi. I'm being totally serious when I say that there's more altcoins coming. Is that not like the most populist thing at the global level you could ever do? Just at a metaphorical level, you have this entity that is collecting all the interests of the United States and then buying Bitcoin and spreading the wealth around for the entire world. I think Tether is, in another way, the Robin Hood of global populism. It's a profound thing to think about it that way. And I think in the future, we're going to imagine stablecoins that are different than the ones we have today, which is basically dollar stablecoins, but true, fiat-based fixings that come from the collateral of Bitcoin. And that's a really profound thing. We're thinking about minting dollars without really even minting dollars. It's actually just a unit of account.
Hey guys, welcome back to Less Noise, More Signal. Today I have Jeff Park with me. Hey Jeff, it's cool to have you on.
Yes, exciting to be here. Nice to meet you, Pascal.
Yes, nice, Jeff. Well, some of my listeners, because I also have some Swiss listeners who might not be spending that much time on X, I guess. And so I think you need to do a quick round of introductions. But obviously, on X, you've been pretty, I guess, one of the most prominent voices lately. One of the thought leader, I think a lot of Bitcoiners and just macro people are looking to. So congrats on really hitting it off and going viral. So perfectly earned as well. But if you could quickly introduce yourself, who are you with? Who are you? That would be great.
Yeah, absolutely. Thanks for those kind words. And I hope I get another chance to visit Switzerland in the near future. So maybe I get to hang with you and your community as well. Love Zug, by the way. Beautiful place. Enjoyed it every time I've gotten to go nearby. So let's see. I'm Jeff Park. I'm the head of alpha strategies at Bitwise. For those who may not be familiar, Bitwise is a US-based crypto asset manager. We manage over $10 billion in assets today. We're most famous for having the world's largest crypto index fund, as well as the Bitcoin spot ETFs, as well as other tracker funds. My job at Bitwise really is to advance the agenda further by bringing actively managed alpha-centric strategies to the marketplace for our investors. So I come from the hedge fund world. I come from trading, and most of the things that really interest me about Bitcoin isn't just the fundamental thesis of what Bitcoin represents. Of course, philosophically, that is why I'm here, and it is interesting to me. But the things that I really am trying to push the agenda for, and I think why, at some level, the things I'm sharing has become so topical for the crypto industry is really about the financialization of Bitcoin to the broader capital markets. And the launch of the ETF was a watershed moment to start bringing that energy. And now what we're seeing is there's a whole slew of different types of corporate securities coming to market, adopting the strategies to leverage Bitcoin and the features about Bitcoin that we all know to make it useful for them, Wall Street, capital markets, and other investment advisors and their practitioners. So I think we're at a really interesting moment where the macro and the micro are all meeting together and creating a lot of uncertainty. But as you know, it's actually in those moments of uncertainties where there's greatest opportunities. So excited to chat with you about it.
Yes, that sounds amazing. And I think to some of the things that you were alluding to, the hyperfinancialization and the financial engineering that's nowadays going on with Bitcoin. To me as well, it's so fascinating, because probably similar to you, because you were alluding to it when you talked about the philosophical roots of Bitcoin. If you really go dig deep and know where Bitcoin is coming from, it's really this sort of anti-establishment, anti-fiat, anti-financialization, I would say, technology, and that's what many Bitcoiners also hoped it will be at some point, and maybe even make the fiat system sort of obsolete if you're really idealistic about it. And maybe the more sort of realistic Bitcoiners would have always said this is maybe too much of a goal and not such a low hanging fruit. But what I want to get at is sort of, and that's where I want to start, is with this really hyper financialization that's been happening. Because like so many Bitcoiners, as I said, they hoped for fiat to sort of obsolete the fiat empowered financial engineering. And then, it's with the companies as well that we're seeing that are sort of taking Bitcoin onto their balance sheets. Many of them are sort of zombie companies as well. And they are being kept alive by the today's fiat debt machinery that we have, and now it's actually Bitcoin, which might be able to help them survive in the long term. And so it feels sort of ironic, and it's maybe not a question that I have here, but I just want to throw this at you if you have any thoughts on this as well, like the irony that this is taking at this point in time.
Yeah, yeah, absolutely. It is a little funny, and at the same time, I think what it's confirming is the one truth we knew all along, which is that companies buy Bitcoin the same reason why we buy Bitcoin as people, because it represents a path that looks orthogonal to the system that we inherit today, in which you could find outperformance by adopting different standards. And so, there's various reasons for corporations to adopt Bitcoin on their balance sheet. The most aggressive version, as we've seen, is strategy in the way that it's become a financialized Bitcoin vehicle. But actually, in the future, I think there's going to be more companies buying Bitcoin, not just from the financialization aspect, but because of the social capital that will also be accrued by those types of companies to be able to win consumers and win operating leverage in businesses. The truth is, Bitcoin is a funny thing that feels at times like a mirror, in the sense that it represents what you want to see when you look at yourself. And so people sometimes think it's a security, and some people think it's a commodity, and some people think it's a FX. And they're all true. They're all right. They're all correct. And this is why the unique hyper financialization opportunity of Bitcoin is so profound. We're imagining, corporate securities being reinvented by Bitcoin, but we're also talking about an entire lending market that could be developed off of Bitcoin as pristine collateral, which is then different than thinking about Bitcoin as a settlement layer for international trade. So all of these things was the profound opportunity for Bitcoin. And what you saw in 2025 is that conversation really has entered the mainstream era. Everyone is now talking about the role of Bitcoin as a reserve asset, potentially in the way that it could be beyond just kind of the things you and I or corporations are adopting, but countries as well.
Mm. Yes, I see. I mean, you alluded to it. There's a couple of ways that Bitcoin is sort of almost perfectly made for financial engineering. And you said something about the social, cultural aspect of it. Like social impact that it might be driving. Can you maybe elaborate here on the many levels that you think? Why is it that Bitcoin is so perfectly made for this type of financial engineering that we're seeing?
Yeah, absolutely. Great question. I would say there's three prongs to the reasoning. The first is Wall Street and the financial system generally loves volatility, because volatility can be monetized and it can be productized in a variety of different categories. And you can do risk preference, risk tranching, a lot of things to bring business by leveraging volatility. And I would say actually in general, that's been the trend of where the capital markets has been going. If you think about how popular zero-day expiry options have become, where now on S&P and NASDAQ, they're over 50% of general expiry every week. And there's actually now conversations that there's going to be single stock options that expire 3 times a week, Monday, Wednesday, Friday. I mean, we're getting pretty close to the level of bringing volatility to the marketplace with leverage. And so the trend of volatility being embraced on Wall Street is unstoppable. It's totally unstoppable. And Bitcoin is almost perfectly suited for it, because the very definition of its existence has to permit volatility. So maybe we can spend a quick minute there, which is the number one thing that people always ask me is Bitcoin going to be volatile forever, or is it actually going to be less volatile in the future when there's more adoption? And my contrarian take to, I think, most people's conversations so far is that I tell them it's going to be volatile forever. Um, and the reason I say it's going to be volatile forever because it's part of its design. And the design being that there's a fixed quantity. And so if you think about most monetary regimes and policies and frameworks, you have to make a conscious trade-off of assurances, right? It's price or quantity. One has to give in controlling the supply and demand. And the fiat world we know has been very clear. We're going to sacrifice quantity because we're going to basically create more supply to keep price stability. That's the entire mission of the Fed and the ECB and the BOJ. The price stability comes at the cost of quantity manipulation. Bitcoin represents the exact mirror, which is actually, we're not going to manipulate quantity. It's fixed, it's programmatic, it's knowable, and it's automated. And therefore, the escape valve is price by definition, because if quantity can't move, it's going to be price. And so the volatility of Bitcoin is inherently part of its design. This is what I tell everyone. And because of this, it is perfectly suited for financialization because it's literally meant to be volatile. The second thing that is part of this conversation is it's an incredible collateral asset. Wall Street also loves collateral. That's the other thing, because an entire system of banking is built on collateral and leverage multiples and ratios based on that collateral system. And to have something that people believe is pristine collateral that can be a store of value against monetary debasement means there's a path to imagine that asset being the underlying foundational layer of money. And then you can actually do credit on top of that business, right? Because the reason credit is challenging for operating companies is because usually operating companies can go bankrupt and they don't exist. Or if you do asset-backed securities on like credit card receivables, the consumers actually just stop paying and they go and the economy gets weak and they don't actually pay off their credit card debt and the thing breaks. If you can bring credit markets to pristine collateral where you don't have to deal with those kind of operating leverages, which is what Bitcoin kind of represents at the core, well, Wall Street's going to have a field day because you can start now doing a lot of cool things with credit securitization and tranching where the collateral is not nearly as impacted by the state of the economy, the health of the economy, and those kinds of things. And that's the other reason that it's perfectly suited for financialization. I would say the third thing is a little bit more elusive, but equally important, which is that it's incredibly it's high volume. That's the other thing Wall Street needs. You need scale. And the historical anomaly in the past has been that most volatile things don't actually have a lot of volume. The reason it's volatile is because there's no volume and price is gapping, or there's kind of jump risks because something's getting impaired. Think about the FX market, right? It's very big and it's not very volatile. Same thing with the Treasury bond market. Very big, not very volatile. And so there's an inverse relationship. Bitcoin, for the first time, represents something that looks orthogonal, which is you can have a lot of volume and actually have a lot of volatility. And that's the other thing that Wall Street needs. It needs capacity and scale. In a way, I always tell people it looks more like oil than almost anything else because oil is also very big in supply, but it doesn't not volatile. Oil is absolutely volatile. And it moves with macro regime, as you know, as does Bitcoin.
Yeah. Wow. Quite a few things to unpack here. So that's very interesting. I want to draw back to your first point, about, being Bitcoin having this sort of, constrained supply side, and that's, I obviously agree with you because it's just econ 101, probably that this is something that will make sure it is always volatile. At the same time, you have these Bitcoiners that would sort of push back and maybe say, well, it's true, but what if Bitcoin manages to kind of tame the financial system as a whole, not really the fiat system as a whole? And then maybe there, some hope that many people had that Bitcoin will also make sure that central banks won't be able to print money that easily anymore and all these sorts of things. Wouldn't that then have the effect of like making the world as such less volatile? And in that world, Bitcoin would also be less volatile? Or, how do you think about these type of things? This show is brought to you by NewHedge. In a market driven by complexity, insight is everything. NewHedge is a dedicated Bitcoin analytics and intelligence platform delivering cutting-edge analysis, on-chain metrics, and real-time market data. With 200 plus proprietary indicators, live derivatives data, and adoption metrics, NewHedge provides the depth and precision that serious market participants demand. Backed by some of Bitcoin's most prolific investors, NewHedge connects traditional finance with Bitcoin's evolving landscape. Gain your data edge today. Sign up for free now at newhedge.io and get 50% off your advanced subscription with the code SIGNAL.
Yeah, I love this question. I love this question. And we're going to take a little bit of a path here and imagine the world 20 years from now. We have to close our eyes and really think about what are the assumptions we're challenging and where are we thinking about the role of Bitcoin in the future. I think the number one fallacy by that argument is people assume that Bitcoin itself is actually that stable money base layer. I think that's the fallacy. It's a fallacy because the base layer for most financial systems cannot be volatile. Otherwise, it wouldn't be the base layer. And so the bridge we have to have here is imagining a non-volatile asset that is backed by Bitcoin that actually then serves as the foundation of the financial engineering to be had. So this is where I think stablecoins become really interesting. And I think in the future, we're going to imagine stablecoins that are different than the ones we have today, which is basically dollar stablecoins, but true, fiat-based fixings that come from the collateral of Bitcoin in a way that people can underwrite generally some kind of ability to think about that leverage ratio. And I think that's where we're going to see the path merge a little bit, where the Bitcoin can still be volatile, but if it's a credit on a volatile asset, that doesn't mean the credit has to be by definition be just as volatile. There's different ways to absorb that risk.
Can you expand on this a little? How would that look in practice, actually? Because would that be just like a layman's perspective would be, okay, that's a sort of a stable coin that's partly backed by Bitcoin in some extent, but then also maybe by some of the interesting credit products and stuff that's, or like it's just the financial engineering that's coming along now. And this is going to sort of back this, or how would that look? Like still have fiat and then Bitcoin, but making fiat sort of more stable, so to say. That's what I heard you say. Can you, emphasize that?
Yeah. I mean, most of the financial modern engineering and physics we know today is based on this assumption that the risk-free rate is U.S. sovereign credit worthiness, right? Which is the Treasury bond and the yield curve. And what I think I'm trying to allude to is there's a world we have to change potentially in the future where the risk-free curve is not U.S. Treasury. In fact, U.S. Treasury will be part of the risk-free rate, but it's not the entire risk-free rate. And in that kind of multi-asset world, you can imagine Bitcoin also serving a role in part of the pool of capital that backs credit. So there's various versions of this. I think the most pure version people talk about are like Bit bonds, where you literally have Bitcoin-backed paper and there's credit originating on top of that. It's possible. I think the other version is Bitcoin is one of others where you mix these assets. So you have some treasuries, you have some Bitcoin, and you have some other things that gives you more diversification and more adept portfolio construction as a result. But all of this, by the way, has to be underpinned by the idea that Bitcoin will also be perpetually going up. And Bitcoin perpetually going up because it is a store of value for which there's always going to be more of an inflation adjustment to Bitcoin than it will be represented by fiat manipulation. This wouldn't work. You thought Bitcoin would actually not go up. I mean, the whole point is that Bitcoin would go up. And there might be volatility in the path of it going up, but the point is that it's not ever not going to go up. Do you see what I'm saying? Difference path of volatility versus the terminal state people think that it will be. And as long as you believe the terminal state is higher, then the volatility can be weathered by a good credit.
Yeah, I see. Okay. Yeah, that makes a lot of sense. I mean, in terms of that volatility, I also, so maybe I hear my left-wing people or colleagues now criticizing this and saying, okay, I hear you, Bitcoin is really perfectly made for financial engineering. I knew it all along. This doesn't make sense because something which is only sort of primed for financial engineering, hyperfinancialization, it doesn't serve a function, and so what do you say to these people? Because I also heard you say that that might be even a benefit because Bitcoin not being entrenched that much in the real economy is sort of then one of these purely play on volatility, which has no sort of connection to the real economy. And then if something were to happen, I mean, it cannot really affect the real economy in the same to the same extent. And in that way, it could even be positive. So, you know what I mean? It's sort of this dichotomy as well.
Yeah, I think those folks, as you called your liberal left-leaning friends, I think a great starting point to bridge the gap in understanding is to ask them what they think about gold. Because if you're anti-gold, then it's going to be much more challenging to have this conversation. But if you are understanding of the role of gold nonetheless in the system, then Bitcoin just represents an upgrade of gold with portabilities in ways that are much better for everybody, including its censorship resistance. So what I'm trying to allude to here is 20, 30 years from now, if Bitcoin succeeds, it will potentially be part of the sovereign conversation. And the price of Bitcoin will not move because you and I are buying it. It's going to move because sovereigns are buying it or selling it. And that sovereign dynamic is actually the marginal buyer and seller dynamic you sometimes see in oil, right? Oil moves violently, not because you and I are trading USO. It moves because there's geopolitical components to sovereigns, right? Need to source oil for your economy. And they're size buyers and sellers. And so in that construct, you can imagine Bitcoin being similar, like being gold-like for why people are trading it, but also oil-like in the ways that it is part of like that economic fabric. And so
Mhm.
I think the future is imagining that realm where basically Bitcoin is an upgrade of gold in the way that it serves a role for creditworthiness, ultimately, if people believe this is pristine collateral. And I think that's all there is to it.
Yes, I see. Interesting. I mean, we talked about these zombie companies, adopting Bitcoin, and maybe the first line of defense, so to say, that is actually doing it right now. And some people have been complaining that Bitcoin corporate adoption is too slow, and also they've been lamenting that like the likes of Apple or Microsoft haven't invested their cash into Bitcoin, even though everyone thinks like, it's melting like a freaking ice cube, and why don't they move? So what are your thoughts here? I mean, are we ever going to see them anytime soon, or yeah, will they just be the laggards again, or will they never move on to Bitcoin? What do you think?
I absolutely think they will move on Bitcoin. And the reason I believe that is because Bitcoin is a generational tailwind. Young people love it and old people are dying. And so at some point, the demographics change. And if you are able to adopt something that culturally people love, the kinds of social capital as a brand you can build for yourself is undeniable. It's actually why I think politically Bitcoin has also become very popular. It's not an accident that Trump embraced Bitcoin for the Trump administration's election campaign, and also why Bitcoin is becoming part of the political discourse all around the world. Just now in Korea, as we're going through a constitutional crisis, the conservative candidate is a pro-Bitcoin candidate. And it's important because young people like Bitcoin and they want to support it. And so companies that are growing, and I think like if I had to make a guess on the Max 7, like the one that would be the first to embrace something like Bitcoin might be like a Facebook, where they know their users are generally young and they know that crypto plays a role and it's not enterprise facing, right? Most of Facebook's business is not really like a Microsoft business. It's actually just facing the retail aspect of its population. Um, and so you can imagine they being consumer centric will be one of the first to embrace Bitcoin. So I actually do think it's a matter of time. And eventually someone's going to do it really well. And then everyone's going to wake up and be like, oh, okay. So if Mark can get away with it, that means probably I can get away with it now too. And I don't have to get fired for making a rash decision. You just need like a champion who can be a courageous voice for the industry.
Yeah. I mean, to me, it's really this gradually then suddenly meme that is floating around for years in Bitcoin, and I think it's coming back in stages always again with all these different adoption cycles that we have, and then first it catches companies, and then maybe at some point it catches sovereigns, and then the Max 7 and stuff. Because like, as you alluded to, I find this fascinating. Bitcoin, to me, it's almost like the biggest growing quasi religion, if you see it like this, because Bitcoin has such a religious pull, where it also sucks in all the people, and if you compare it to Mormonism, veganism, whatever there is out there. I mean, it's probably the fastest growing religion in the world, like having grown three digits or something, that's so fascinating that at some point these companies won't be able to, yeah, resist that sort of pull that it has, right?
Yeah, yeah, 1,000%. There's been this kind of conversation in the past too, where one of the ways that the global elites, the Davos crowd, for example, gets attacked is that even though they're citizens of all these different countries, they actually share more in common with their own countrymen, right? This idea that because they're such uber billionaires, they have more in common with each other in like the way they speak the global like language. Like the understanding of the global elite culture is actually the thing that ties them together, not their own people of their own country that are like, lower class. And this rise of this Davos class is actually a problem culturally. Bitcoin's actually the exact same thing. Like when I travel the world and I talk to people that are in crypto, and you do this all the time, right? Because you're on the road and you're a nomad and meet different kinds of people from all walks of life. The cultural connection you get from knowing they're in crypto is far stronger than actually knowing like what was your background and where do you go to school or where do you grow up. Like those are important. I mean, I'll eventually want to know them if I like you, but the first screening thing is like, are we on the same team here? And that affinity, right, can be really, really powerful. So I completely agree.
Yeah.
It's a cultural phenomenon at the core.
Yeah, it's crazy. I mean, I do also work for a bank part-time, like in an investment management. And there, obviously, I go to these lunches and just like meetings with other banks, and then we talk about traditional investments as well. And maybe the topic might even be a traditional investment, sort of talking about real estate. But when you mentioned that you were sort of the crypto investment manager at the bank, like even though it's maybe making up 2 or 3% of a portfolio, in the end, everyone is talking about crypto again, And so that's exactly this pull that you mentioned and this connection. And because it's so interesting, everyone sort of wants to talk about it. But I feel like it's not only this social capital, that has unfolding its pull, but it's also this economic incentivization, which will lead to more companies adopting Bitcoin. Because, and you said this, I think, in your podcast with Michael Saylor, where you said like companies will sort of be incentivized to adopt Bitcoin because they will be included in these newly emerging Bitcoin indices. I think where you at Bitwise also work on these, and you said it will help them lower their cost of financing in some sort. Can you maybe, and this will turn into a virtuous cycle even, and can you explain that in more detail, how that will sort of unfold as well?
Yeah, sure. So I think that people underestimate how important indices are in today's financial services industry. Indices are really, really important because there's a huge um, swath of products that basically control the flow of capital based on these indices. And it's actually become a proxy in ways for people to measure like equity capital appetite versus debt capital, private versus public. People track index flows and funds based on those indices. And what that means is ultimately when you become part of an index and your stock therefore benefits on those passive flows, your cost of capital as an equity goes down because your equity goes higher. And so there is this built-in subsidy, if you will. I call it kind of like an index subsidy for being part of a giant passive flows conduit. And what can happen with a Bitcoin-centric index is that just like that, there's going to be people who want to support Bitcoin-based companies. You may actually know this. There's actually these ETFs that also are called like religion ETFs. So like they have like a component where it's like supporting faith, and like it could be the CEO is like a devout person, or it could be the companies operate in devout communities. But whatever the point is, the ETF is branded as like a faith ETF. And if you're a religious person, you buy that faith ETF because you think that's basically contributing to the greater goods of the cause. The same thing happens with Bitcoin. And so, our hope at Bitwise is that by having a Bitcoin standard corporations index, in which we now have a product, the ticker's OWNB, where it's actually filled with global public companies that have Bitcoin on their balance sheet, 1,000 or more. Essentially, if you buy these, you're also supporting the public mission of helping these companies lessen their cost of capital. And hopefully they can do more things if their equity is valued more highly in their own financial goals.
Yes, so fascinating. I mean, with all these indices that are emerging, I mean, I also recently had this epiphany, when I talked to, I think, a colleague of ours on X, James von Stratton, he was really mentioning like Bitcoin is the asset class, and I've been in Bitcoin for 10 plus years, and I've always sort of, it resonated with me because I wanted to believe it. I was like, yeah, Bitcoin, I'm not a maxi, but I'm really close to it, and so I'm like, but how can it be an asset class if it is only one asset, And this now, seeing all these indices coming up and like all the products that MicroStrategy has sort of pioneered, it really feels like, okay, now I get it. This is where the asset class is at. And so my question even goes to, will we maybe see indices that focus on governments that adopt Bitcoin? And then in that sort of same vein, what about governments adopting Bitcoin? I mean, that's also something people have been complaining about, that it's been too slow, sort of.
Oh, yeah, yeah. Most financial advisor surveys have shown that over the past 2 decades, the overwhelming trend is young people do not like advisors. They like to do it themselves. This is unstoppable. Young people want to control their own money. And part of that means is that they want to vote with their feet. They want to invest in things they believe in. That's why ESG also was a very popular movement for certain young people. They really care about that and the carbon footprint. So they're going to buy products that reflect those values. And I think we're going to see continual pushes towards that kind of disintermediation where you need to go to the consumer first. And Bitcoin is one of those where it literally is a retail consumer centric adoption curve. So I think that's key. The second thing I would mention too is it is a Bitcoin world. I think much like you, perhaps, I have been a Bitcoin maxi at the core in the ways that I always believed Bitcoin would be the most important thing for most people. It doesn't mean Ethereum is not important, and I actually do support all the great things that are happening in the crypto ecosystem, but Bitcoin is in its own class. And because it's in its own class, there's permutations you can do on that base layer. So when we say, I joke around sometimes that strategy is the altcoin of TradFi because it trades with leverage, volatility, and beta to Bitcoin. So it looks like an altcoin just for TradFi. I'm not really, I'm being totally serious when I say that there's more altcoins coming. Like when 21 Capital launches, that's an altcoin too. When other Bitcoin Treasury companies launch, those are going to be altcoins as well. And the question is like, why are these altcoins different? And it won't be any different than the way that the crypto community has found allegiances to their own bags with like altcoin tokens. It usually has to do with some kind of leadership in the memeability of that social leader. It will have to do with some kind of financial engineering, the tokenomics of that altcoin, like 21's altcoin tokenomics versus Strategy's altcoin tokenomics. And that roadmap will make it look like it's Bitcoin's world. And there's just different ways to trade Bitcoin risk, which I think is kind of where the world is going.
Mm. Yeah, it's at least altcoins that are like properly sort of connected to Bitcoin in some sense, and that's why it's probably also more doable in the sense of like for real maxis to trade with. So, but I mean, the question regarding the governments, because I heard you say as well at some other point, like we'll see the emergence of quasi public-private partnerships that are starved for yield, and they will turn to Bitcoin. It might not be outright governments, but sort of these commingled partnerships. Can you elaborate on this as well?
Yes, absolutely. So I've been talking to Bitcoin for now, let's see, 8 years, trying to get institutional investors to buy Bitcoin, first at my prior hedge fund and now at Bitwise. And I know something that I think most people know, but may not have experienced it the way that I've experienced it over 1,000 plus meetings, which is all humans are the same. We do not want to do things that don't help yourself first. And if you are a public servant, I'm really making a big distinction here between companies and public entities, right? Private interest versus public interest. If you're a private individual, you do things with a goal that's aligned with your own selfish motivation. Also the same with corporation. The problem with public is different because if you're representing a public institution, you don't actually benefit in the private gains of those decisions that you're making because it's actually public, right? Like if you are a CIO at a pension fund and you make the call to buy Bitcoin, you're not actually benefiting from the risk you've taken in that now having to publicize the upside. But the downside is entirely private. You're going to get fired. if Bitcoin goes down.
Mhm.
So if you're a rational human being and you represent a public good, it's very, very hard to get them over the hurdle. And it's not their fault. It's just how it's set up. And the same problem exists with sovereigns. If you are running for election and you want to have the most battle-proof way to continue to win elections and things like that, you don't want to take the risk of actually promoting something that might backfire. The only way you can do that is actually if the will of the people is so strong that it's no longer your decision. And that's why I made the argument back in January that the executive order strategic Bitcoin reserve was a nothing burger. Because if you think about who the people are involved in that EO version, right, David Sachs and others, they would then have to go and actually vouch for, let's buy Bitcoin on the US's balance sheet. And there's a person now you can literally point to and be like, that was the guy who made you do that, right? Whereas if you did it through a legislative process and you actually got Congress to approve a bill to buy Bitcoin, it's the will of the people. Now you can't blame anybody. And that's why the emergence of that path is really important. It's not up to politicians to just decide arbitrarily by executive order, we're going to do this thing, because they're actually not going to do it. Because the risk is too high. Because I've seen this story. They generally don't do things unless they're going to be able to, limit the down.
Yeah, I see. I totally get that. My question would only be right now in the US executive branch, sort of, we have, like, let's put it this way, an unconventional sort of administration, which is maybe not that popular with anyone, but with everybody. But at least it's sort of, they're doing things in unconventional ways. So
Yeah.
could we argue that right now we even have this window of opportunity that like somebody who is maybe as unpopular as Trump, but doesn't care, might take a courageous step and maybe go down the route like something with bit bonds. I'd love to hear your thoughts on bit bonds and if they're likely. Yeah.
Yeah. This did 100%. And this is actually going to tie back to what you alluded to earlier. It will be done through a public-private JV partnership. It won't be the same way that I think at once upon a time, there was a conversation to have a U.S. sovereign wealth fund, right? A U.S. sovereign wealth fund can buy Bitcoin. But the way the U.S. sovereign wealth fund could buy Bitcoin is not going to be strictly out of like the public funds of taxpayers. It's going to be some kind of private public type of effort where like there's an investment manager, it's a private entity that's managing the public good, right? You can imagine these kinds of constructs where it's not going to be like so obviously, public. It's not that different than like the Harvard Endowment. The Harvard Endowment's a public pool of assets, right? It's tax exempt and AAA rated for the benefit of higher education, and it's $70 billion. But the company that actually manages that endowment is called the Harvard Management Corporation, right? And there's ways to imagine these kinds of partnerships with the public's interests in mind that brings closer alignment, which is why I think the announcement with 21 was really important. It goes back to how do you involve sovereign interest that is not directly assignable to the sovereign liability. And the case I've made there in the past was that SoftBank, even though it's a private company, really isn't a normal private company because so much of Japan's will for growth is embodied within the company at a pretty nationalistic level. And it also has sovereign capital as its backers. Like it's actually the Middle East public funds that are part of that. So these entities can do things that like, the National Pension Service of Korea is not going to be able to do on behalf of their citizens. And that's, I think, the trend that I'm hoping we'll see that ultimately step and acquire Bitcoin, issue bit bonds, do all these things.
Yeah, it makes a lot of sense that this is the way that this is going to unfold. I mean, on the mechanics of bit bonds, what are your thoughts there? It's like, because I read this interesting quote by also a friend of ours, Joe Consorti, and he was sort of saying stable coins and tokenized money markets are buying up the short end, of treasury bonds or bills, so to say. And then could Bitcoin, a treasury issued Bitcoin collateralized dollar denominated bond cover the long end maybe? And so what are your thoughts there? Is that something also that could then really bring down interest rates for the US government, or is that sort of wishful thinking?
Yeah. So I don't know all the details of exactly what the specific Bitbond version is, because I hear it being applied differently from different people. But I'll show you what I think is a possible path. the way I'm imagining what a BIP bond could look like. You're absolutely correct that right now, most of these stablecoin protocols and treasuries are buying the short end of the curve. And the short end of the curve is actually not that helpful for managing US fiscal deficits. You actually need buyers on the long end. We all know this. But the long end is the most
Mm.
challenged, right? And so the question is, how do you unlock Bitcoin in a way that can bring long dated capital as well into creating like a stable coin? And so I think there's a few paths, but the one that I'm most curious about that I think could be the case is if you buy like a bunch of long dated treasuries, we know the price moves, right? Like because
Mm.
it is sensitive to long term interest rate. But if you believe in its money goodness, you can actually start like tranching that up a little bit differently. So like the senior piece is actually just always going to be flat, and then the
Mm.
equity will be therefore extremely volatile. Um, and so then what you do is actually you sprinkle a little Bitcoin in there. Because if you put Bitcoin in there, the relationship changes because Bitcoin to treasuries is not obvious and it's unstable. And if you think Bitcoin's going to go up, there's a hope factor for the equity as well. Even when treasuries go down, Bitcoin could go up. And so the equity might actually still live. And so you have to kind of imagine what this
Mm.
financialization looks like. You have on the top layer a very stable dollar, and it's 10% LTV or something like that, where like there's no way it's going to be impaired. And then you have some mezz, and then you have this super juicy equity piece. And this super juicy equity piece is like the ultimate degen product. Like, and I think I've told you already, like the world is going towards financialization. People want vol. People want X, 3X levered ETFs. There's buyers for these things. They want gamble. This hyper equity basically has the residual of your long dated 30-year bonds and Bitcoin. And I could imagine that thing having demand, which is crazy. But actually, this is where most of the interest for volatility comes from. So then you've actually found the perfect market where you have stable dollars backed by Bitcoin and long-term treasuries. And then you have like a degen product that also has some kind of product market fit.
Yeah, that's mind blowing. I mean, it's so fascinating. I mean, would that help to bring down borrowing costs? Because like some people have been arguing, like companies like Strategy, they can borrow at cheaper rates than sovereigns like the U.S. What's happening here? And so my question is, because that would probably be some of the ultimate goals that a U.S. government would pursue with something like this. Really bring down like borrowing costs.
Yeah. Well, I would first say your first statement that Strategy can borrow cheaper than the US government is absolutely false. Actually, Strategy can't borrow cheaper than most IG rated companies. The distinction I think I'm making here is people assume if you pay 0% interest rate, that is the only thing that reflects a credit spread. But we all know part of why the convertible market priced it at 0% was because you received the call option on the underlying stock, which is extremely valuable. So if you actually pull out Black-Scholes and you price out what this option price is on the
Mm.
$1,000 issuance of par, it's very expensive. Very, very expensive. And so once you take that out, then you can actually then do like an implied credit spread calculation on the residual value. And then you'll see it's actually really expensive. The credit spread is pretty high. Now, Strategy has figured out how to reduce that credit spread by taking advantage of its own volatility, which is the ingenious thing that Saylor has done. But it
Mm.
does not mean that Strategy borrows cheaper than US debt, for sure.
Mm. Yeah,
Not
yeah, that's a great point. Yeah, that they sort of figured out a way to choose it up, so to say. But I mean, besides this, I mean, would it still be a like a strategy to lower government borrowing costs in your view? Like incorporating Bitcoin into some sort of structure?
Yeah, I think there's a path because the arbitrage here is that some people care for nominal yield and some people actually don't care about nominal yield. They think that the capital gains on the upside will be better. And Bitcoin is the ultimate fuel that makes that calculation very challenging because of the high volatility behind it. So there are people who are willing to presumably give up longer dated rate gains if they thought there was upside exposure to the principal participation of Bitcoin's price. And this has not been married yet very well. But you can imagine someone might say, hey, I actually don't need 4.5% for my 30-year paper anymore. I will actually just take 4 and then give me a little bit of Bitcoin upside. Like,
Mm,
it's just kind of packaging the portfolio construction of these orthogonal assets. And I think that's part of how we're going to be able to reduce the cost of borrowing. You just incorporate something that can go up in price, that is not manipulatable by supply, and that is more
mm,
pristine than the idea that the Treasury keeps rolling its debt infinitely on its credit worthiness.
mm. Yes, I see. Interesting. Maybe one more question on this capital 21 capital announcement. Like, can you did it at some point already, but can you explain this triumvirate between like SoftBank, Tether, and Cantor again? Why is it so important to you? Yeah, that would be great.
Sure, sure. So, um, I've made the point that both Tether and the financial repression in Japan are related outcomes of the same phenomenon, which is the strength of the dollar hegemony against the Triffin dilemma's core paradoxes. So, what I mean to say here is there's a huge demand for dollars. And so Tether capitalized upon that and essentially is being an offshore money market, kind of Eurodollar market provider for that demand piece. And they're capturing that spread of that interest portion, which, one might argue should be rightfully the US's, because it's their
Mm,
privilege to be able to issue these paper. Um, that's happening because of the insatiable demand for US treasuries in dollars, right? On the other hand, Japan is on the other side of that, where like because they've been the buyer of these treasuries also to kind of permit their chance to compete globally with a lower exchange rate, they are also the largest buyer of treasuries the way Tether is, but for different reasons. Because Japan is actually more like fit in with like the trade system as we know it, the trade system that we know that is becoming quickly potentially unwound. And so both of these companies are outputs of the same malaise, and they're basically now merging, as I see it, in the ways to bring the interest in a line, which is Tether needs a way to improve productivity if interest rate was to never go back up. And if you think like interest rate's going to go down in the next few years, like that's going to affect Tether, right? And they need to
mm,
build diversify around that. And likewise with Japan, they have to still find a way to like park their cash flows and assets. And SoftBank is in a way like a quasi representation of those interests as I think about it. And we know that the credit component is really the key piece in the Bitcoin Treasury flywheel that Saylor has been experimenting with. And the idea here is if you can find offshore bond investors that are looking for dollar denominated yield, like Japan, for example, their cost of financing will be almost lower than almost anybody else because the premium they put on US dollars and US treasuries. And that's something that I think is really interesting and not historically have been possible with just the American bond market that MicroStrategy's accessed.
mm,
And then Cantor, of course, is necessary because actually Cantor, in my opinion, represents the American interest of actually then bringing the fee model to Wall Street and financializing it, and also ensuring that the U.S. has some skin in the game for facilitating this intermediation of capital flows. This wouldn't work without the Americans also having a piece of the pie in the way that the capital conduit is being built. And I think Cantor represents that extension of it.
yeah, I see. It really feels like this perfect triumvirate that is being built here. It's like just amazing. You also said in your podcast with Laura Shin that you think like Jack being the CEO of this new 21st Capital conglomerate, so to say, he could bring a more optimistic version to what Bitcoin could unlock, which is not just the sort of value, as opposed to maybe how Saylor has done it in the past. And I found this also a fascinating way to put it, but what did you have in mind when you were sort of saying this?
Yeah, great question. I think there are a few lens to it that refers back to what I was saying about like these are different altcoins and the energies they bring to investors' interest. And so you have to kind of look at it through that. Um, you know, the most obvious contrast is Jack is young. Jack is young. Jack is more close to me, I think, in the ways that I would imagine being a shepherd of the future's vision than perhaps Sailor's might be. Again, I'm not saying Sailor is disagreeable. It's just I'm a younger person. And I have an optimistic hope and view of what the world should be, that it's not just about like, oh, these companies are all becoming zombies, so they have no choice to buy Bitcoin. That's a pretty dark view, right? Like that works with certain narrative building, but young people are also pretty optimistic and they need to hang on to this idea of something being actually a net sum EV positive endeavor. And I think Jack can channel that energy. Partially why I think Jack can channel that energy is because he is a crypto, like Bitcoin native entrepreneur. And he is authentically representing all of the interests that are well known in the Bitcoin community, not just from like the maxi camp, but also really thinking about like long-term viability of scaling its security
Mm.
problem. Even like lately with the OP return debate that's been happening, which is, reminding you of like the block size war back in the years. You need to participate in these conversations if you're going to be a true champion for Bitcoin with credibility. And I see Jack as someone who's more able to be nuanced about these conversations because of the rails he's built on the use case for Bitcoin beyond just a store of value. And that actually touches the second point I
Mm.
want to make, which is so far, Saylor has done an incredible job with financial engineering the liability side of the capital structure to create volatility. But he hasn't done a lot on the asset side, right? The asset is just Bitcoin and it's just sitting there. I
Mm.
think at some point, people will demand a little more. People will demand a little bit more asset level productivity because that's actually what banks are, right? You actually have to do something with the assets. You can't just sit there and like financialize just the liabilities. And I have a thought that Jack would be a credible person who can bring upon some of these use cases because of all the work he's done so far in the space.
Mm. Yeah, that's also a great way. That's actually something that I would think that would be sort of predestined to do as well. Because I was thinking about this with MicroStrategy's balance sheet. I was always wondering, like, yeah, is he going to turn into a bank at some point? But if you listen to Saylor as of now, he's really like, no, it's being productive. We could just leave it there. All the liability side that I can sort of empower with Bitcoin being the collateral, it's enough. But maybe at some point, as you said, people will demand more to be done with the assets on the balance sheet. Maybe one last topic that I want to turn to is really this connection between Bitcoin and stable coins, like the interconnection even. And there, I mean, I tried to coin this term and I heard I heard other people talk about it as well, like the Bitcoin-Stablecoin Flywheel,
Mm.
and like just easily, like if you have this schematic, you have like sort of Bitcoin is rising in price. This obviously maybe pushes up the stablecoin market cap because historically this has been the case. If the stablecoin market cap is being pushed up, this means more money to be invested into treasuries, and more treasury, sort of by a fiscal theory of monetization, is more monetary inflation, which again pushes up Bitcoin. And then you have this flywheel, which could sort of go on forever. So my kind of thing is, yeah, do you have any thoughts on this? Because obviously it makes a lot of these like unbacked statements, and there's also the question like, what's the mechanism between Bitcoin up equals stables up? It has empirically been happened and been true, but is there also a direct causality? So maybe you have any thoughts to share there as well.
Sure. Um, I think historically there has been a direct correlation, mainly because the rise of Bitcoin came with the rise of other coins as well that leverage stablecoin productivity. So, what I'm trying to say here is when Bitcoin goes up, Ethereum historically has gone up with it. And Ethereum actually leverages stablecoins as part of the financial productivity in the marketplaces that it's building, which accelerates stablecoin adoption. Um, so I think there is some like transitive correlation here that has historically been true, but it hasn't been direct. And I think the version of the world that you and I and others are hoping for is that there might be a more direct causality, that there might be a more direct effort in which Bitcoin's rise directly impacts stablecoin market caps and circulation. I think actually this is where 21 again is really interesting because Tether is incredibly profitable. And the fact that their profits can now be reinvested into Bitcoin without affecting like the stable coin, like collateral in themselves is in a way an incredible subsidy, right? If you actually think about what is happening here, you have this entity that is essentially participating in what is now, as I call it, the exorbitant privilege of the United States, which is like the ability to print dollars forever and actually make everyone else hold it. The beneficiary of that is Tether with all the interest. Great. Now, if you can channel that interest and profits to buying Bitcoin, is that not like the most like populist thing at the global level you could ever do? Like just at a metaphorical level, you have this entity that is collecting all the interests of the United States and then buying Bitcoin and spreading the wealth around for the entire world. I mean, that's, if you think about it that way, like a pretty incredible thing. And the direct lineage there that I'm trying to imply here is Tether is ultimately a stablecoin company, and the rise of Bitcoin ultimately will allow them to do more things, building the rails on the usage of Tether on Bitcoin Tether2s and whatnot.
Yeah, I mean, regarding Tether, what I've been contemplating is even like how likely is that Tether is sort of it de facto is a new shadow central bank, and it might be the biggest shadow central bank that we have in the world, you know. And I'm trying to entertain the thought of maybe at some point this shadow central bank being Tether, and maybe in conjunction with these other companies that we mentioned, it might even be bigger and more essential than the US central bank itself. And the way I'm trying to think about this is because like the euro dollar also market is probably bigger than the onshore dollar market. Some people have at least argued. And then if this unfolds in a similar way, and the stable coin being sort of the euro dollar market 2.0, and we all know that stable coins and digital dollars on like moving dollars digitally on blockchain rails is so much more less frictionless and more efficient. I'm wondering, like, in a sense, bigger that Tether's like asset balance sheet could be bigger than the U.S. central bank, the Fed, at some point. You know, just because I'm trying to infer this, but it sounds really futuristic and maybe far fetched. But I don't know if you have any thoughts there as well.
Yeah, no, it's a fascinating thought exercise. And I think ultimately what this comes down to is recognizing that a dollar is just a unit of account, right? So when Tether imaginably issues stable coins that are backed by Bitcoin, and you have like a financially engineered LTV against that, it doesn't actually even mean they hold dollars. It's just a unit of account and how people want to do their calculus of like what like the credit metrics are. I mean, that's a really profound thing. We don't like, we're thinking about minting dollars without really even minting dollars, because it's actually just a unit of account. And that's actually what I think Bitcoin is doing in ways that is causing a lot of nervous energy. And that's actually what the Eurodollars was too. The Eurodollars had no guarantee whatsoever from Washington, and nonetheless it thrived because the unit of account was credible enough that people did trading on it. And it's no different. People doing trade on Tether, knowing the unit of account is money good. They actually don't care about the dollar itself.
Hmm. Yeah, no, it's just like because Tether being so influential in the stablecoin market, obviously, but then also in terms of like with its connection to Bitcoin, Paolo and all the people being actual Bitcoiners, like buying a lot of Bitcoin with their profits as well. So they're coming back to this stablecoin Bitcoin flywheel. We have a, even if it's not the outright connection, again, it is some sort of connection that's being established there. And you know, the more this euro dollar market 2.0 will grow, the more Tether will grow, and then again this will feed back into Bitcoin for sure. So I guess at least to me there is some sort of corollary there, or some correlation, you know, and maybe even some causation, so to say. If like Bitcoin is going up, stablecoin is going up, and then again it's reinforcing itself. So it's
Yeah.
all very interesting, yeah, in the end for sure.
Yeah. I think Tether is, in another way, the Robin Hood of global populism. It's a profound thing to think about it that way.
Yeah, no, for sure. Cool. Well, I mean, we've gone almost an hour, so Jeff, I think thanks a lot for doing this. That was great. Hope to do it again at some point in the future. But I want to let you go. Any final thoughts and things you want to share with the audience?
No, this is great. I love having the chance to engage the community. And I would just say, if you're ever in New York, give me a ping, and would love to
Mhm.
catch up over coffee and other things.
Exactly. That would be great. Cool. So have a great one. Bye, Jeff.
Take care.
Thank you.